Buying a home is a major accomplishment, but not if it costs you more than you can afford. So, on this episode, we're going to talk to you about how to buy your first home without going broke.
Welcome to the Homeowner Prep podcast, where every week we educate and encourage aspiring homeowners to help them buy their first home faster. If you aspire to own a home, you're in the right place, so enjoy. Do us a favor and leave a review, a rating, and be sure to subscribe. Now let's get to this week's episode. Hey, real quick before we start, I want to ask you a question. How long are you going to wait before you decide to get started? I mean, you want to buy a house and you're earning income, so what's holding you back? Visit our website at homeownerprep.com/start. You can take an online assessment and set up a free 30-minute call, and we're going to put a plan together to help you get from where you are to where you truly want to be. So don't let fear hold you back from buying your first home. All right, now back to the episode.
Hello, and welcome to another episode of the Homeowner Prep podcast. Thank you so much for checking in on this episode, and welcome to 2023. On this episode, we really want to talk to you about buying a house and how much of an accomplishment that is, but how to do so without going broke, without costing you an arm and a leg, and how to do that the right way. And so we want to just give you a couple quick pointers as to seeing where you're at, making sure that you're buying a home that you truly can afford, and then looking to just get started and maybe buying the dream home down the road. So there's a couple key points that I want to talk to you about. And the first one is, how do you know how much home you can actually afford? Well, there isn't a rule as we go through budgets with clients, and we look at buying a home as a rule of thumb of about 33% of your total income. And that's your gross income. We had another episode where we talked about the differences between a gross income and a net income. But the bank, when they're qualifying you to buy a house, they're going to use your gross income. And so a rule of thumb is your house payment, your household expenses should be about 33% of your gross income. And so whatever your income is, just multiply it by 33%, and that's what your payments should be. Now, when it comes to figuring out how much of a home would fit that payment, you can use free tools online like a mortgage calculator and really dive into seeing what type of home you want to buy, whether it be a single family home, a condo, a townhome. And that matters because there may be an HOA payment that you need to include in your monthly payment as well. So depending on the type of home that you want to buy can have an impact to that monthly payment. Also, your property taxes, depending on where you're at, your property taxes are going to be different. So you can do a quick Google search to figure out what the property taxes are in your neighborhood. So that way you can factor that in as well. And don't forget about home insurance. You definitely want to include home insurance when you're factoring in your mortgage payment as well. So you can obviously use a tool online, if you do a Google search for a mortgage calculator. And of course, you can always reach out to us and we can run some numbers for you as well based on your area, what the numbers should look like, and how much of a home you can actually afford. But remember, a rule of thumb is about 33%, so definitely keep that in mind. The second point I want to make is oftentimes we get asked, hey, I have some debt. Should I pay that off first before I buy my first home? And the answer is it depends. If you have, say, student loans and hundreds of thousands of dollars in student loan payments, it may take you years to pay that off before you can actually pay it off and buy your first home. In the meantime, while you're paying on the student loan payments for years, now home prices are going up. Cost of living is going up. We have inflation. So we have all these economic things going on. And so you may be paddling it up against the river, and so you're trying your best to, pay off debt. All the while, housing expenses are getting higher and higher. And so therefore, the time that you're using to pay off debt can actually be hurting you. And so it definitely depends. If you have a small debt, maybe a credit card, things of that nature, and it's really going to make an impact to your debt to income ratio, your DTI, then sure, let's pay it off so you can afford more home. But if it's something like student loan debts or a large debt where it may take a long time to pay off, you may want to get into the home, let the appreciation of the home work in your favor, stop paying rent, and that way you're earning some additional appreciation on your home all the while you're paying off those other debts that you wanted to get to. So my suggestion is look at the debt, see how long it's going to take to pay off, and then look at how much homes are appreciating in your area. On average, as a nation, homes are appreciating about 4% a year. So you want to factor those two things in when it comes to making a decision. Should you pay off the debt before you buy your first home? More often than not, I say get into the home, let that asset appreciate, and then you can pay off major debts down the road with that appreciation. The third point I want to make is that you should start with a starter home. I know oftentimes we sit down with clients and they are anxious to buy a home and they have all these things on their list of hey wants and needs, and I really want to have a pool and all these different things, which is great. I mean, definitely you should have an idea of the house that you want to buy. But if it's not in your budget, I don't want you spreading yourself too thin and just living to pay the mortgage. So start with a starter home. Maybe you have to start with a 3-bedroom townhome versus a single family home. Maybe you have to start with a condo instead of a single family home. Whatever the case may be, the object is to just get in the game. You want the appreciation of the market to work in your favor and not against you. And so sometimes that means just getting into a starter home. Again, we don't want you to go broke trying to buy your first home. This may be the first of many, or if it is your one and done home, you want to make sure you're set up in a way that you're not struggling to pay the mortgage and potentially going into foreclosure a couple years down the road. So definitely look at a home, look at the things that you want, but what are the things that you can scale back on just to get in the game? It's going to be better for you to buy a smaller home with fewer of the things that you like versus waiting, renting, and not taking advantage of the market and letting it work against you. So definitely start out with a starter home. If you have questions about, hey, what is my budget? As I talked about, mortgage calculators and trying to figure out how much home you can afford, that's what we're here for. We're here to help you budget, pay down debt, and really put a plan together to buy your first home sooner. So definitely feel free to reach out to us. You can visit our website to get started at homeownerprep.com/start. There you can connect with us. You can take an online assessment. And if you're really, truly ready to get going, we can connect you with a loan officer or a real estate agent in your area. If you just have a general question that you want to ask and just get a simple answer back, the best way to do that is through our social media channels. We often get a lot of our questions through our Instagram channel. And so you can reach us on Instagram at HomeownerPrep. And so if you just have a simple question that you want to ask, we can help you there as well. I hope you got some value from today's episode. Again, we love the fact that you're fighting and doing the things and doing the work that you need to do to buy your first home, but we don't want you to go broke. We don't want you to struggle to pay the mortgage, and we definitely don't want you to end up in foreclosure years down the road. So we want to make sure that you're ready and prepared for home ownership. I look forward to providing you with some more great insight and information on the next episode. And until then, be blessed.
If you've enjoyed this show and got some great value from it, please be sure to rate and review. And if you're checking it out on YouTube, please be sure to subscribe. That really does help us to continue the show and bring in some great guests to help you on your home buying journey.